G'day traders, Sam here from Trade to Prosper. Now looking at Link, and Link is one of those ones that had a a great, exciting performance, and then towards the all-time high, it didn't really do another rally, as you can see. So, come when Bitcoin did a nice rally in May 2000, yeah, around 2001, and then it found its dip at 28k. You can see how Link really didn't do much. It pretty much failed. Where did it fall? Pretty much okay. So it went above the 0.618, but not much. Interesting. Um, so that was really disappointing for Link compared to the other alts, and then it just dropped. Now, there's some good news about Link if you haven't heard, and you should look it up. I won't go into it, but it's big boys are interested in it. So if they're interested in it, we should be interested. They've got many things. So it's an oracle, which means that it connects the blockchain with databases, and oracle and the Link basically becomes a middleware. Anyway, so let's have a look at Link from a big picture. Let's look at the daily or free daily, see what it's doing, and see if we can see any trends. So that didn't quite work there. So if we do it there, that probably makes sense. So from that previous bottom, we found the 0.382, and then you can see the 0.618. Let's just adjust it a bit more, and that's touched it there. So this is what we have. Now let's just get rid of some of the moving averages. What we see is whoops, do want to do that. In many cases, this is a wave 5, and so if we enable, okay, there you go, automatically done it. So we have our wave 1, 2, 3, 4, 5, and A, B, C correction. So if we have our, let's just put that in there. So we're doing our Elliott wave count. And we're doing our correction. And our correction pretty much is a wave 5, as you can see here as well. It's got 1, 2, 3, 4, 5. But from another perspective, it's just our A, B, and C. Now let's turn these off and let's see why this came there. The reason why I'm doing this, there is other components to this. So yes, so we have confluence there. Let me just flick that into templates. Okay. Let's just do that. Move to the right. Okay, so from a fib extension to the downside is probably the 1.414. Okay, so we got that, which corresponds with that, making a strong case for an entry. Now, if we look at it from a wyckoff perspective, yeah, so that will be the spring, and now we're moving up. We've passed this 3-day body candle, so that's the next level is $9.70, $9.77. Okay, so basically close to there. Let's look at the indicators. It's still got upward momentum, and the MACD is still looking good. So there is upward momentum, and if you look at this from a trading perspective, you can argue that I would say that was a good entry, and you can see how, yeah. So that was the breakthrough. There was a good entry. That candle did it pretty much, initiated, and I can see that turning, but that's a free day. Let's look at the weekly. The weekly. So let's change this. And make that free day. Cool. From a weekly perspective, yes, it looks like it's a bottom. Yeah, you can hit the 50% and then come back down. That's okay. And you can probably argue it's a wedge. It's bullish divergence. And so the weekly is looking good. So this week, today is the last, I think, 12 hours, and then the week pretty much closes. So yes, here we go. From a weekly perspective, we've got the weekly resistance right here. So we want to see that break that above that and close above it to be much more bullish. Let's just do the magnet. Okay, so that's why we've got that rejection there as well. So the weekly level is there with the body of the candles, and the next weekly is pretty much there. Quotes to that. I'll be probably using that more so. And let's do the point of control. Okay, so that lines up pretty much with the weekly. The point of control there. And so I would say roughly there, $12 is the beginning of the main resistance. So we might go to $12, is my thinking. Looking from the big picture perspective, close to it. There's a little band there. And so let's pull back. So this is bullish because we've just seen how this is going on the weekly. $12 might be a rejection spot. And now if we look at from a trend perspective, the body of the candle, that's one. The body of the candle, that's two. Okay. So we've got 2 points there. So this could be 0.3. Again, giving us a reason why this area is going to be a strong resistance. $12, $13. Okay. Now let's go back to the 12 hour and add, let's see, where are we? Add the 10 and 20 moving average. Okay. So what we're seeing here is a bit of a bearish divergence at the moment on the 12 hour. So it's likely that we can come down. Let's do the trend line as well. Okay, let's change that. Oops, I don't want to do that. Get rid of that. So we've got the trend line, and if this dips down through, we can say that, okay, the 10 and 20 moving average. So I do think that we are having a bearish divergence. This might just come back and then drop. Let's see the RSI, not 12 hour. Very close. So I do think we're going to get a bit of a bounce. I think we might just keep going up just from here. And you can see the first touch there, second touch, third touch. So there might be some consolidation around here before we break up. So in here, we might have some bit of volatility and then break up. Or we get a good rejection from Bitcoin, and then I don't think that's going to happen at the moment. I do think this might just go up a bit more. Very deceptive. I'm not sure, but that will require a nice strong candle and breakthrough. So that is definitely a rejection area. We've got a few in that candle there, and so pretty much aligned with the lines I've shown before. So let's split this in half. And bit of consolidation here, and I think it'll break through. What I want to do is put it to the 3-day. All right, there we go. From a macro perspective, are there any patterns? Don't know. Not sure if there's any patterns that we can rely on that one. But definitely this level here So we've got this level to break through, which is probably likely to happen. And we've got that trend line. Let's do it from another perspective. Let me just look at it from the wyckoff perspective. So sell and climax. So what we can do is, I don't know if we can do it, but I'll try. Okay, there we go. Sell and climax. And this is what we're doing right now. So we've got our middle point there, and we're going to have some volatility around here before it can go up. So we might just break above it, come back down, and then continue on. So we're in this space here at the moment. So here is our, so this is our sell and climax secondary tests. It's pretty much aligned, isn't it? The spring, this is one model, the other one is pretty much the same. So that's our spring. And off we go. So that's pretty much in line with this. So you can see that line, and there is our main resistance, pretty much. Now the target for this, if we were to apply the same rules, make that a 1, you can see now if I was just to pull back on this one, does it line up with our 1.6? Yes, it does, 1.618. So the golden ratio is also in that facility. So yeah, I do see volatility there. It's a bad area to enter. It's a hard one to enter for leverage anyway. For spot, it's fine, but I do see that being difficult from a leverage perspective because it can come back down a bit more. The width, the range could be a fair bit. And as I said, we have on the 12-hour some bearish divergence. So if this MACD crosses over, then we can come back down, touch one of these support levels, and then go back up. So avoid leveraging, but spot's fine. So that's all I got for now. So let's go back. Cool. And I'm going to leave it on the 3-day. Let's see, where's the 3-day? There we go. So let's just put that level in there, making that 1. And you can see if it goes vertical or not. Depends if it goes strong, breaking up, then we could probably get the 1.618. If it keeps going sideways, then we'll probably hit that trend line and then come back down. I do see this as a relief rally, and that's our one cycle. Actually, this is the one cycle there. This is second cycle. If we have that and come back down, we might get another support. That could be our third cycle, or we can go further down. But I do see potential resistance in this area, or if it's a bit more bullish, then here. But if we get here, then realistically, bugger, that's going to be a strong move. Let's check it from one more perspective. Give me a sec. Let's see from there to there what it is. From the top to the bottom. I'll just reverse this, and I should. Okay, with our 0.5. I need to reverse that, sorry. Okay, so the 0.5 is roughly there as well. I don't think it'll come to the 618, but it might be able to do that. Just really depends on the market, but I don't think that's the case. I think, so if we were to add this 0.3, yeah, so the 0.3 is this is a major hurdle, and we'll get a rejection there for sure. So let's just clean that up. Just anticipating. And let's just do this last bit. You can see from this level to swing low to swing high, we've got these fibs. This fib does come in tight. It's in sync with this wyckoff measure, which is a 1.618. Also with the macro fib level. So this is going to be a strong resistance. And I'm sure if I add, let's see, let's just add a few moving averages. So the daily ones are okay. The daily ones could actually stop it there too, and which aligns with this level here. So we might not be able to get there. That is one level definitely to come back down. That's one. So that's my first target. Second target, and with very little, yeah, I don't see going above, but the maximum that could be it, the 0.5, because the 0.5 is the neckline. That's the neckline, and that's the secondary neckline. So the main, yeah. So this is where everything went south, and so this is my good entry to short if it gets past that. All right, I'm going to leave it at that. Please give me a like and share, and I appreciate your comments. Cheers.